That's divine way to start the day. Coming together is beginning. Keeping together is progress. Working together is success. Now I call upon Mr. Loganathan from first year bank management to welcome the gathering.
On behalf of the Bank Management Department, Auchi College, I am honored to welcome all the teachers and students who are gathered here for this seminar on the topic wealth management. It's truly a privilege the opportunity to learn such experienced and knowledgeable educators. First and foremost, I would like to welcome our distinguished principal madam, Dr. N. Bhuma, who inspire hope, ignite the imagination, and instill love of learning among us. I would like to warmly welcome our guest speaker of the day, Mr. Vijay Nirmal Kumar, Senior Vice President, HDFC Bank, who has more than 2 decades of experience in the field of finance. We appreciate your willingness to share your knowledge and expertise, and I am confident that everyone here will gain something from your presentation. Welcome, sir. As students, we constantly seek ways to expand our knowledge and improve our understanding of the world. This seminar is a perfect opportunity for us to do just that. To the students here today, I want to remind you to make the most of this opportunity. I want to thank the teachers who have organized this event and generously donated their time and expertise to make this seminar a reality. Your dedication to education is truly inspiring, and we are very grateful for this opportunity to learn from you. In conclusion, this seminar will be a valuable and informative experience for all of us. So let's make the most of this opportunity and take away something new and exciting to share with our peers. Once again, I welcome all to the seminar. Thank you.
Thank you, Loganathan, for the enlightened welcome. Wealth is not about earning lot of money, but all about having a option. Now I invite our beloved faculty, Dr. Ponnasi ma'am, to introduce our honorable chief guest, Mr. Vijay Nirmal Kumar, Senior Vice President of HDFC Bank.
Hari Om and a very warm good afternoon to one and all present here. Today we have Mr. Vijay Nirmal Kumar, Senior Vice President and Regional Head, HDFC Bank, Chennai. Regarding introduction, when I seen this his LinkedIn, it really surprised me. The words and the areas in between his profile, it related with US, that is US Navy SEAL, and the other thing is Barclays, and so many things are there. The major thing is his education. He did his MBA in General Symposium Institute of Management Studies and BA Mechanical Engineering Anna University, and he is a proud student from Don Bosco School. His experience, currently he is a HDFC Bank Senior Vice President Regional Head. He started his in this bank in July 2019, currently 4 years. And other than this, he is Edelweiss Financial Service Limited Group, Senior Partner and Team Leader. He started in 2016 to 2019. He is a team leader, private manager, banker, managing the regional global wealth, private client advisory business. Apart from this, his role includes administrative manager and private client advisory, such as in the field of business build-up, client acquisition, client experience, process management and strategy. He continued his services in Barclays Wealth International Private Bank as a vice president or assistant president from March 2019 to 2016, 7 years, senior private banker, and his original role in this is team member responsible for startup and rollout of local operations in local areas. It helped in recruit, train and build processes across the total number of offices, including in Chennai. He continued in Merrill Link Global Private Limited as an assistant vice president from 2008 to 2009. His role in this is cross-border advisory, focus on equities, then private equity debt, succession planning, structured notes, international equities, business build-ups, network creation, partnership creation, and apart from this, he is a business planner also. He continued as a wealth advisor and assistant vice president in ASK from 2007 to 2008, Chennai. In this, he played a role of recruiter, trainer, coacher, mentoring, brand new sales technologies and acquisitions of client base from southern market, which is not done by any other person from South India. It's a great honor to be you in this podium, sir. It is a role of mammoth கேள்விப்பட்டிருப்பீங்கன்னு நினைக்கிறேன். யானைகள்லே பெரியது. அதோட ஒர்க் என்னன்னா, it is consuming more and more work and delivering to the outside world. Sir did that major role in ASK Wealth Management. And he also did his service in HSBC as Assistant Vice President from 2006 to 2007. Here he has done a revenue matrix which is done by him only, not by anybody else. Business activities, marketing for the branch, client advisory, and from Started Chartered Bank, he is a regional manager, relationship manager, and team leader from 2003 to 2006. Apart from this, we surprised me really is and thanks to Nimita ma'am, அவங்க கொடுத்ததுக்கு அப்புறம் இதை தேடினேன் நானும். Is a former national level cricketer and currently Apex committee member of Tamil Nadu Cricket Association. And next to surprise, he is a martial artist with black belt in Kempo and brown belt in Karate, a lifelong student of martial art learning, Kalari Payattu, Indian martial and warrior cultures, trained leadership under elite military leaders, Echelon Front and Jocko Welken from retired US Navy Marshal, which is a priceless moment for us, his presence today. Thank you, sir, for accepting and honoring this seminar to the bank manager and the whole college of Auchi, sir. Thank you.
Thank you, ma'am. Now it's time for felicitation. I request Principal ma'am to the honor. As Warren Buffett rightly said, the best investment you can make is an investment in yourself. The more you learn, the more you will earn. To learn the concept of how to manage wealth, let's invite our chief guest Vijay Nirmal Kumar sir to address the gathering.
Thank you, Principal ma'am. Thank you, everyone. Thank you for the warm welcome. It's an honor and pleasure to be here. It's quite embarrassing to see all the accolades. At one time, I was a student like you, and not very good, not very well behaved. So nice to see all of you so well behaved. And I was just telling the faculty sometime back that I believe that sport is more important to a student's growth than academics. It may seem intuitive, but I think one learns a lot actually by committing mistakes rather than by doing the right thing sometimes. So thank you. Thanks for the warm welcome. Before I continue, I want to understand a little bit as to, instead of me going through wealth management, am I audible without the mic? Okay. Okay. So is there any query that you have on wealth management? Do you understand wealth management? Do you have any view on wealth management? Any of you? What do you understand of banking? What is it that you want to do in banking? So what do the students want to achieve when they're doing the banking course, so that I can be on, let's say, agenda? Okay. So let me start from overview of what, at least from a business point of view on banking, right? So you typically have in a bank what we call the corporate bank, wholesale bank, where there is lending done to corporates and institutions, and they manage forex, treasury, and so on and so forth. So that is one segment of the bank. Then you have the retail bank. The retail bank manages individuals, it manages savings accounts, it manages personal loans, credit cards, home loans, it's called retail assets and so on and so forth. So these are broadly the two splits that you can see in terms of the bank. But what has happened is, over the years, with the foreign banks and others entering the country, see, there's a lot of focus on wealth management. And there's wealth management contributes largely to the retail banks' revenue. It's a high impact business, and it is usually the roles are taken by people who have done good education, people who have done good masters, people who are intelligent, and so on and so forth. So it pays well. There is a very, very lucrative market for people who are wealth managers, investment professionals today. So the bank places a lot of emphasis on wealth management. So when I speak about wealth management, for example, there are different segments in wealth management. There are people who manage wealth for maybe a segment of people who have who are regular individuals and so on and so forth. There are people who manage wealth for high net worth individuals. When I say high net worth individuals, it could be people who are senior executives, entrepreneurs, and so on. And there are people in the bank who manage wealth for the promoters and family offices and treasuries. That's a business I handle. So when you're talking about promoters, family offices, and treasuries, imagine what amount of control and expertise you as a executive should have, that you can advise somebody who runs businesses, who runs offices, somebody like your own college promoter. So these are the kind of individuals also that we advise. So this is a fairly lucrative business, and it's a very important business for the bank. So this is something that has taken off from 2003, 2000, where all the banks started incorporating wealth management practice. It was initially a domain of foreign banks. Today it is, part of every bank. So any questions so far?
Wealth management is about diversing your assets and investments in a broad way. So
So
if one fails,
that is as an individual. As a student, what do you understand so far? So do you have a view that you want to be a wealth manager and so on?
not right now, sir.
Not right now. No, no. So where I'm coming from is the student's perspective.
Oh.
What is the? Do you understand where wealth management plays a role? Is what I want to say.
Wealth management is everywhere, sir.
Excellent. Okay, we'll answer your question in the presentation. Right, it will come
Thank you,
through.
sir.
So okay, let's start with basics of investment so that you have a view on how things are structured. So what happens? When you earn money, so you can save money, you can spend money, or you can invest money, right? So saving is just putting money away so that you can spend it later or use it for some other resources that you may need at a later point in time. uh, Spending, of course, what happens when you spend money, you don't have any money. Investing money, so what is the difference between saving and investing? You can go down. Okay, so this is what Warren Buffett says. Is it visible to everybody? So spend what is left after saving, right? Because otherwise you will have a huge debt. Next. So what's wrong with just saving? So this is where there is a huge difference between investment and saving. So with just saving, your capital actually erodes over time. What that means is there is a factor of inflation. Your retail inflation in India is targeted at about 6% today by the RBI. That means every year the cost of goods goes up by 6%, which means that your value of money goes down by 6%. So if you're just saving your capital without in a piggy bank in your own house, the value of that money 1 year from now is lower by 6%, right? The next thing that people do is then look at how they can save in deposits and other instruments. So those instruments may give you, depending on the tenor, a certain interest. So therefore, they will help you only preserve capital. They don't actually help you grow capital, right? So if you're saving and you're putting away in a deposit or in a FD or in a bank or in a corporate deposit, net you actually just preserve your capital because it is still within inflation. So there you go. What happens in terms of inflation? What is worth 30,000 rupees today and what will be the equivalent of it 20 years hence? So impact of 5 years of inflation on your corpus, if you keep putting 30,000 rupees and keep it in a box in your house and don't spend it, after 20 years, that value of that amount of 30,000 should be 80,000 for you to buy the purchase and assets you can purchase today. So you will actually not have 80,000, you will have only 30,000. So your money is actually degrown. So therefore, just by saving, there is no point. So that you have to manage your wealth in order to ensure that you're at least at the same corpus, at the same principle, counting in inflation. So as we did the previous slide, we are just seeing the reverse of that. So 1 lakh today is equivalent to something like 35,000 rupees 20 years hence. So it's important to understand that you need to invest. There is no point in saving. So what lot of families, promoters, and others are doing is therefore they make very strict standard plans. So when I sit with a family office or somebody, I have to make a plan of action. I have to make a plan of action on how we execute investments, how we mitigate risk, what is the you know strategic plan, what is the tactical plan. So we have to get down to nitty gritties. We have to do a lot of risk mitigation measures to ensure that we reach the goal that we want to reach for the family. So it is actually a little bit of so anyway. So this is for you as individuals, as you said, start saving early, start from saving. So first you got to save capital, because when you get money, you may have immediate term expenses. You may not be able to invest it for long term, right? So first you got to save money so that you can take care of immediate term expenses. Then comes whatever surplus on that, you start investing so that your money can earn money for you as you earn and grow forward. Yeah. Go. So if you look at the kind of investments that are happening around the world, an opportunity for you as bankers and as if you want to be in the profession of wealth management. You look at USA, it's about 145% penetration, UK 85% penetration. In India, we are at just 16% of penetration of mutual funds. So this is just an indicator of what kind of opportunity there is in wealth management in India. Now, why is this important? In USA is a country that has already hit a certain size. UK is a country that has already hit a certain size. In India, we are still a growing economy. We are saying 10 years from now, our economy will be one of the largest economies in the world, the top 3 economies in the world. We have a population where under 60, the population is about 60% of the population is under 60 years age. So that means that population will consume, earn, grow, and there is a huge opportunity to create wealth. And in that opportunity space, we are at only at 16% penetration. So anybody getting into the field of wealth management has a lot of growth opportunities available to you. Right. So as we said, deep under penetration, there is a huge opportunity for wealth creation with the evolving ecosystem. Financial savings will go up. Regulation and technology are making it more and more easier for people to access and move out of conservative wealth practices and saving metrics into creating actually wealth management protocols for themselves and their clients. So there is a huge opportunity for anybody who can study. There is very simple processes. There are a lot of courses you can do to learn about more about wealth management. We'll come to that in the end. But there is a huge opportunity if you move in that direction. So this is the growth of the Indian market. So if you can look at where we were in 1986 and where we are today, this is taken as of June, look at the kind of growth in the market that you're seeing. Despite all the political crisis, the economic crisis, and various crises that has hit, look at the kind of growth that we have seen in the Indian markets. What you're seeing is basically what has happened as wealth creation across the country. You're seeing that, the markets are basically a reflection of the economy, a reflection of the underlying companies that form the benchmark. So unless the companies in the underlying benchmark are growing at a certain rate, the markets will not go up. There may be up and down, there may be various speculation, but it will always revert to the mean in terms of what the growth rate should be. So we're looking at since inception, we have compounded at about 13.5%. And we're looking at 20 years, we're looking at about 17%. So this is a market. Warren Buffett, for example, compounded his wealth only at about 16%. Here, doing nothing, the Indian markets have compounded about 14%, let's just assume. There is a huge opportunity, and there is still a lot of opportunity for India to grow and be one of the leaders. Again, the reasons are very simple. It's because of people like you. This is a country where everybody is aspiring to a better lifestyle, is aspiring to do more, is aspiring to work hard, and therefore it is reflected in the economy. So therefore there's a huge opportunity for one to invest, earn, grow, be a wealth manager, be a banker, be in the financial services. There's a huge opportunity. So look at how the current population of India, see the penetration of mutual fund, only 1.6% penetration. So almost every, if today if you take my institution and other institutions, there's a lot of emphasis on creating branches in rural India, tier 2 cities, because there is under penetration. So there is going to be a huge demand for wealth managers, huge demand for bankers, people who can, but banking is not the lazy banking that you would have seen earlier. Today it's got to be aggressive banking, right? Of course, the same opportunity, lies across passenger cars. There's a huge opportunity in trading. So the economy is moving from unorganized, disorganized, um, individualistic to an economy that is actually getting more organized, greater, emphasis on having the ability to put things in place, whether it's in terms of, being aggressive, getting a job done as a banker, and so on and so forth. So I think this is a good opportunity for you as students to see that your careers, if you go in the right direction and you follow the instructions given by your professors and do enough of learning, and there is a huge opportunity for you to build your careers. So we can skip this one. So what happens in investments? See, sometimes equity markets and other markets, as he was saying, people need to study a little bit and understand. So what happens is, this is generally the psychological cycle of an investor. First, he's got a positive outlook and therefore he invests. So you can just see it's quite self-explanatory. Once you hit a certain peak, you tend to be complacent. Then the market starts coming down. There is denial, fear, panic. Then again you go for, hope for survival. Again you come back to optimism. But what you see is a cycle. And India, the cycle keeps playing out, but the market, as you can see, the chart is going upward. So when the chart is moving upward, basically it shows you that the ups and downs of the market will happen. But in terms of the economy, the underlying strength of the economy will be reflected in the markets. So that's fine. So this is what we were seeing, and this is what I was trying to explain. You can have a peak, you can have a down, again you have a peak, but the graph is sloping upwards. We can just skip. No, we'll skip this. Move forward. Move forward. See, those are a little complex, so I'm not covering that. So what happens to do good investments, like you rightly asked, right? So as we spoke about, first you do your saving part, ensure that your basic requirements and your cash required for the first 3 to 6 months, whatever you have to spend, is taken up. You have made the right investments, right saving for that. So whatever you don't need beyond 6 months, there are various tools for managing investments. So there are various rules. Like if you are younger, you can take more risk, you can have more allocation to equities. If you are, a little bit more risk taking, you can have more mid cap and small cap funds. If you are, so it depends on the age. So when you plan investments, it depends on the age, the risk profile, the liquidity, the taxation, all of that come into play in terms of developing a strategy for the right investments. So when you want to, therefore you need to actually not, beyond a point, not do it on your own. If you do it on your own, from somebody giving you a tip, somebody giving you something, there is a very high chance of you either losing money, or you not having the right tax, where the tax impact is high, or maybe you need liquidity and the money is not there. So ideally you should have somebody planning it for you, have a wealth manager, and have a financial plan set in place. So in today's world, a lot of free websites are also there where you can have basic financial plans done for understanding your risk profile and so on. For detailed financial planning, they may charge you a fee, but basic you can have a lot done. So once you do your financial planning, you basically break your assets into what you want to expose to risk, what you want to expose to safety of principal, what is the time frame, and then based on that, you derive certain strategies. So one of the principles, I don't know if you guys have learned about it, because I didn't do banking and banking course, so I don't know what is in your syllabus. So anybody knows what is rupee cost averaging? Yes, anybody raised your hand? You raised your hand? No. You know? No? Anybody else? So simple principles, right? So let's say that you want to invest. Ma'am knows? Okay, so simple thing is you don't expose, supposing you have 100 rupees, you don't expose it all at one shot to the market, because today the market may be at a peak, tomorrow it may fall suddenly. So what happens is you have entered at a certain point, price point, which becomes your entry point, and therefore your cost of purchase gets polarized. So you buy it in steps. You buy it across, let's say you do a simple systematic investment plan or a systematic transfer plan where you buy every week, you buy every month. So you're putting away your investments and savings regularly, so that irrespective of the graph going up or down, you are buying at different points in time. So you're averaging your price of purchase. Correct. So when you average your price of purchase, so you're not buying it at 100 rupees alone, and then if the market is at 95, you're at a loss. You're buying at 100, you're buying at 95, you're buying at 97, and you're averaging out your entry price. So end of the day, your average entry price may be 97 and the market is at 107, you have a profit. So you try to de-risk, these are de-risking measures, right? So basically, when you do that, as individuals, when you do that, what will happen is a lot of times your fear and greed in your mind is what causes errors. So supposing you are fearful, you'll say, no, I don't want to invest now because this is happening. Or you're very greedy, you'll say, no, market is at a peak, I'll put all my money. Now what happens is when the market is at the peak and you put all the money and there is a Ukraine war next 1 week, 10 weeks, maybe next year, the market may be down. And then you will be saying, oh, all my money went away. It's not the market's fault. You need to be able to see, that's why you need an advisor. But if you're doing it on your own, you should be able to see, understand, and take a decision. So, but when you do it in a systematic way, supposing your age is 20 and you have a lot of time. So maybe then what happens is 80% of my corpus is going into equities, 20% is in debt. So when you do it in a systematic way, month on month, whatever you've got surplus, you're starting to put in equities and you don't want to look at it for the next 3 years, you will not be swayed by the fear or the greed cycle. Because what will happen is even if it's bad, supposing the market has fallen good for you because you're buying at a discount, right? So if you're buying some shirt at a discount, why not buy it? Because you're going to buy and hold it, right? So you don't go through the fear and greed cycle by having a process. So follow the principle of being disciplined and compound your investments. So that is what we try to educate clients. So when I spoke about asset allocation, right? So it's like a thali. At lunchtime, maybe you guys will be hungry, but good, take a look at this. So see, what happens is, let's say you're running a business and all your 100 rupees is only in that business. And that business has a bad business cycle. COVID has come, that business is not doing well. What do? You're sitting on all your capital consumed by one asset class. But when you diversify your asset classes, and within the asset classes you sub-diversify, you spread your risk, right? So that is what asset allocation is all about. So usually equity, which is a riskier asset, moves in a certain way. Debt, which is a non-risky asset, moves in another way. So since they are contra to each other, when you have the right asset allocation between equity and debt, if one is going up, the other will support. And one is going down, the other will be up. So therefore, you will still not be losing capital. So I don't know if I'm going ahead of your understanding, but the simple way of explaining is in wealth management, we follow a process to de-risk by having multiple asset classes in the financial plan. So like that thali, just can you go back? So we may have some equities, we may have some debt, we may have some bonds, we may have some FDs, we may have some international equities, we may have some life insurance. So we may have different asset classes so that you're spread out. So this is just a chart to show you what I mentioned, right? Each year, different asset classes have performed well and have not performed well. So therefore, having the spread helps mitigate the risk And sometimes when you do a good financial plan, you can reach your goals by having a spread. For example, here, in between 99 and 2003, equities were not doing well, except for 1 year. But debt was doing well. So this chart just is nothing very deep about it, but broadly the message to share is how different asset classes move in different market cycles. Between 2003 and 2007, it was all green for equities, right? Then 2007, you had the financial crisis in the US, Lehman Brothers crisis, markets corrected, hugely by 36%. So but if you did the right asset allocation mix, you will survive different market cycles. That is the objective that we're trying to convey. So this is for somebody a little bit more complex, we'll just move. So just understand that your asset allocation mix will deliver your IRRs that you're targeting across volatility. You can move this. So as we mentioned, so this is the kind of returns that we have seen across market cycles for India. Equity, which is listed companies, has delivered about 15.6%. Gold, plus or minus, has given about 8%, 8.8. Bank FDs have given about, this bank FD and other things are cyclical. Now we are in a high interest rate scenario. The FDs you're getting is at about 7.5%. 20 years back, you were getting FDs at even 10%. But during COVID, your FD rates were at about 3.5%, 4%. So the rates will vary. This is a broad indication of how it has happened across time, right, from 1980. So do you have an understanding of how asset classes have performed? And therefore, if you are younger, if you have time on your hand, you should do more equities. You may have volatility in the short term, but in the long term, you can create absolute wealth. So there is no absolute rule. So that's why if you have a planner, it's better, because if, let's say that I'm seeing war happening and you're already at 20% profit, I may not hold it because I may sell it and then wait for things to happen. But ideally follow a disciplined approach, have somebody who's competent, and create all your students as wealth managers so they can advise you. Yeah, next. So in India today, household savings, if you look at it, equities just has 4.8% exposure. This is the kind of split in Indian household savings. A lot of money is actually in real estate and hard assets. Around 49% is in real estate and hard assets. And what this means is that, today as I said, we are not anymore in an agrarian economy. We are in an economy that is becoming more service oriented, in an economy that is getting more organized. So this space of 4.8 will go up to 20-25% in 25 years. So there will be a huge opportunity for creation of wealth in equities. There will be a lot of opportunity in other asset classes. You can skip. Yeah. Next. So India today is one of the largest and fastest growing economies of the world. Anybody hear anything about China? What's happening in China? You guys read Economic Times, anything? Banking students? Nobody reads Economic Times, markets. So what do you know about the global economy? What's happening in China? Is China in a good place or bad place? Huh? Tell. You started saying. Bad, correct. China is in a bad place, right? Okay. So why is China in a bad place? Death rate. Okay. Okay. Yeah, very bold, and if you're like this, good for you, because you'll get selected easily in all the interviews. Good for you. Anybody else? So see, today China is going through its own problem because their economy is not moving. Our GDP is growing fairly fast. When we are trying to actually increase the interest rates, China is trying to cut the interest rates because their economy is not moving. There is a huge amount of debt in China. The whole world is avoiding China because of the way they have been confrontationalist with the rest of the world. So they have taken on the US. They have been posturing to strike on Taiwan, and they believe they are a superpower in the world and everybody should follow them. So but they are also heavily dependent on their economy for exports. A large part of their growth comes from the US. So China today is in slightly, it was a growing economy. It grew and became large because of the export business from the US. But today the same thing is not there. Whereas we are benefiting from this because the US and others want a China plus one policy. That is, they are not confident of China, so they want to have one more economy that is there to manufacture and support in spite of China. So a lot of manufacturing emphasis, therefore, our government is putting on manufacturing and infrastructure, right? So therefore, we are benefiting from the problems of China. We have a huge population that consumes. In our tier 2 towns, people are moving from non-branded to branded, from aspiring and lifestyle is moved up. Lot of retail business has picked up in tier 2 towns. So therefore, our economy is expected to be, Modi is talking about a 5 trillion economy. Some people are saying, we should be a 10 trillion economy and the world, one of the top 3 in the next 10 years. So this will be achievable if we are all disciplined and we are all working hard and our governments are good. I think we are automatically positioned to be a leader in terms of GDP growth. So this is going to be good for your careers. I think what you guys have to do as banking student is be up to date on what is happening around the world. Be up to date. You can spend 15 minutes reading the Economic Times and financial newspapers. What you understand is fine. What you don't understand also is fine, but you will soon understand because you will figure out what is happening around the world. You will figure out what is happening with interest rates. You will figure out what is happening with commodities. And then even if you don't do wealth management as a banker, you should know all of this, because if you're issuing a loan to somebody, you should know what that person's business is. What is his margin? What is his input price? What is his cost of materials? What will be his projected revenues? Whether he can actually meet his business projections, right? So this will be useful for all of you to look at. Change. You can move. So this was McKinsey, which was talking about India's decade. So it's just in India's century, some people are arguing. But whatever said and done, India is well positioned. That's what I was trying to convey. See, we are not just a country, we are like a continent. In India, we have small cities and states which are as big as countries outside in Europe. And the kind of growth that we are seeing in each of these areas is huge. The kind of business that and GDP that we can deliver is huge. Can move. So as this is what I was talking about, so quite self-explanatory. Make in India is what Modi has been driving. So that's driving a lot of manufacturing business. And manufacturing business is moving from China to India, from organized to unorganized to organized players. So earlier when you were able to get something which is not branded, today same thing is being sold to you from a factory where they're employing more number of people, and it's moving from non-branded to branded. The China plus one story where everybody is setting up manufacturing units in India. Foxconn, others are all coming to India to set up their business. Elon Musk, all of them are trying to set up their plants in India because they want to have a China plus one strategy. Affordable housing, a lot of action is happening there. So quite simply, we are moving in the right direction as a country. Yeah, we can move this. Move forward. No, move forward. So again, there's a huge opportunity for India in the digital space, because as youngsters, you will see that a lot of you are actually using your phones to make purchases. So there is a lot of traction happening in the digital space. A lot of unicorns have been coming to birth. You're seeing a lot of businesses which are no longer the traditional route of doing business. You're seeing a lot of broking firms, a lot of wealth management firms which are there digitally. Banks are going digital. So digital is going to be an area of focus, because if I have digital, I can map all my clients, and then I have access to all my clients on, if as an institution, as a bank, I will know exactly whether my person has met you, whether he has spoken to you, whether he has had a discussion on certain thing, what is your cash balance. All of that is available to me as a bank. What is your spending pattern? What is your profile? What is so? At the same time, as a consumer, you have access to a huge amount of information. So there's a lot of opportunity in digital. So this is in terms of our current scenario in terms of the banks. So the net NPAs are coming down. It peaked and it's coming down to 2022, and it's really coming down lower. As you would know, as banking students, the NPAs are a concern for any bank, and the credit growth is starting to pick up. So this is giving you, the banks are going to look better. We can move forward. Yeah, move. Okay. So this is the question you asked. So when you look at equity funds and funds, how the risk moves. So when we talk about hybrid funds, this is generic information. You guys can read up a little bit more. So they have the mixture of equity and debt, the characteristics of equity and debt. So therefore your risk profile is lower. Large cap funds will invest in companies which are blue chip companies, top 150 companies in the index. So they will give you access to good businesses. Large and mid cap funds will invest in the next set of companies which are in the next top 250 companies. They will give, so the risk moves up as you move from hybrid to mid and small cap and sectoral funds. So you've got to be able to, as an investor, you need to be able to understand the risk and then invest. And you should be able to find a financial planner to help you have different asset classes in your portfolio. If you only have a sectoral fund, that means your risk weighted is only on one side. Or if you only have a hybrid fund, your risk weight is on equities is quite low. So you've got to be able to navigate and put together a financial plan, which is what a wealth manager will do. So we were talking about systematic investments and value cost averaging. So we have, I think this is just we can skip this. Basically, it just shows you that it's very effective means to actually go about investing. We'll just close the presentation. See, this presentation was actually made for investors who are first-time investors, but I wanted to just share the concept so that you as students get a view. Some of you may be investing, some of you may be seeing your parents investing, so that you have a view on what is the landscape and what is the role of an investment manager or a wealth manager. Now, I don't know, because I don't know your syllabus, I don't know if I'm moving ahead or behind. Rather than giving a monologue, I'll ask, in fact, since all of you are very silent, I'll ask the teachers to have you guys ask me some questions so I can give some relevant answers. So passive income, okay, that's not part of wealth management, but I'll answer. So passive income is an income that comes to you irrespective of you working, right? So it's an income that accrues to you where you're not actively putting your effort, right? So it could be something like your rental income. It could be income from deposits. As long as it's beating inflation, it is better, but it is just going to be under inflation, it may not be useful. It could be income generated from doing a mutual fund, which is investing a little bit of equity and debt, like a hybrid fund, where there is a monthly income coming out to you. So there could be generating different kinds of income that accrue to you. I may not be for giving you the textbook explanation, I'm giving you the practical explanation on the field.
Talking about the wealth management, you have shown the statistics that there are a lot of opportunities in wealth management and everything. So, what are after BCom bank management? What are the things they can, as a certification course or as a degree, to become a professional in that thing?
Good question. So first thing you need to do as a wealth manager is you need to get an AMFI certification, right? Which will give you the access to distribute mutual funds. So an AMFI certification will give you an understanding of basics of investments. So you can have, it's a license to some sort of practice, but that is not sufficient on its own. You may want to do a IRDA certification, which gives you the chance to advise on insurance. So that is another certification you can obtain. Subsequently, you want to go further, there are many courses you can take up on NSE. You have derivatives, you have forex, you have so many courses that you can do to increase your knowledge and advice. You have the certified financial planning course, CFP, which you can pursue again. There are a lot of people supporting in coaching, so this will help you. Certified financial planning is the minimum that you need to do to be a good wealth manager. Otherwise, you will be doing some guesswork. Maybe also do an MBA first also, whatever you want to add to, but post BCom minimum, do an AMFI. If you're really interested in wealth management, do a CFP. So you will start entry level. You will have to first, if you'll look at being a trainee, you'll look at being in, so you will not yet be given a large role, right? Because you have to prove your credibility. It's after all managing somebody's money. So you can look at starting off in the banks, in the retail banks. You may, so retail banks, you will have the relationship managers, right? So once you've gained some experience as a trainee and you've proven yourself, maybe you will have initially a service role, welcome desk, all of that. Post that, you may be positioned as a relationship manager. You will be given a set of clients to handle. So you will be handling those clients on banking queries, on investment queries, all of that. So that will be the start. So once you do that well, you may want to specialize. So you're not doing some, for example, I don't do any banking, meaning I do some banking for my, but mainly I focus only on wealth management. So you may actually move from being a generic relationship manager to a private wealth relationship manager. From that, you may specialize further into being an ultra high net worth relationship manager. When you're doing ultra high net worth advisory, you may be advising treasuries, corporates, a lot of the others also.
Sir, this may not be relevant, or
Yes.
I don't know how to
Yeah.
correlate this
Yeah.
with today's topic. But when we were discussing inside our room,
Yes.
and you are a sports person, at the
Yeah.
same time you have a very excellent portfolio. I mean, not portfolio exactly. Your profile is very rich.
Yeah.
How do you manage these two?
Huh.
And because the students think that if they get into that sports or anything, they compromise in their background of education or something like that. So please, can you share your input to the students, sir?
Okay. So first, let me hear why students think that. Why do they think that way?
I don't know whether they think like that, but
See,
I'm just.
okay, I understand. So I don't think, see, it depends on priority, right? So when I was younger, I didn't have a choice. So I was playing, I wanted to play sport. So I was playing at a high level. So, back then parents didn't give you choice. You either did well in studies and you played. So then you got the opportunity to play. So when you are clear about your mission, automatically you'll find a way to do something. If you're not clear about your mission, you'll find excuses. So it's not a good or a bad thing. See, somebody is not passionate about something, they haven't found something they're passionate about. That's all we can say. When they find what they're passionate about, they'll find a way, right? So if you take any profession, if you take an entrepreneur, he may be completely spending 18 hours also on his job. Some of them are workaholics. They even go to the extent of dying out of stress. May not be a good thing, but that's their passion. But having said that, you should understand the benefits of what you're doing. If you see, for me, the reason when unconsciously I got into sport, I realized once I stopped sport that all the qualities that I have today in leadership and other things, I've developed it through sport. Because what happens is, when you're playing cricket, you can stand in the sun, you can have rain, those days you may not have good facilities, you may not have water. You learn to tolerate all of that. You don't have your mind doesn't get upset. Once you're able to tolerate all of that and keep your eye on your focus, what happens? You're much better than somebody else. See, there are so many people I see who are much more talented than others, but they don't put in the effort because they are used to having things come easy to them. So it's a question of finding out and then executing with passion. So if you know what you want to do, you're fine. So today, why I still do it? So this morning also I woke up at 5 o'clock. See, it's not, you're not looking this way or doing this for anybody's appreciation. Moment you train, what happens is your mind gets set. See, if you have those first few hours in the morning to yourself, everything else falls into place. You're not waking up at 8 o'clock confused, rushing here to there, not knowing what is your plan for the day, not knowing what is your calendar, not knowing what meetings you're going to do, what challenges you're going to face. So everything, if you wake up early, even if you're going for a run, your mind will play out everything. It's like a meditation, right? Automatically you'll say, okay, this problem will come, this. And your mind also becomes quiet. The moment your mind becomes quiet, you're more efficient. So temporarily somebody can win in whatever they're doing due to luck or any other factor. But if you have a plan of action and you have passion, you will win in the end. So therefore you should know why you're doing it. Just because parents are telling you you're going and doing sports, or just because somebody is telling you you want to look good, you're going to the gym. Both of those may not be the right motivation, right? Because you will grow old one day. Doesn't mean for that reason you're going to the gym. You're going to the gym because you want to enjoy yourself. There is a break. You're feeling fresh. You're coming back. You're building mental discipline. So I think what I'm seeing in the generation that I'm seeing as a gap is a lot of time goes into the phones. So instead of spending, say, maybe they spend 3 hours on the phone. So if you're not spending those 3 hours on the phone, and if you can learn a skill set, how much better will you be? What you're not enjoying maybe, but you can enjoy. Supposing you learn how to cycle and you're going on a long ride and you're enjoying that, you're enjoying the freshness, you make friends, you can make it enjoyable. But it's a question of initial, anything good, there is a big, what do you call, barrier. You have to climb past the barrier, you'll obtain pleasure. But if you don't climb the barrier and you quit before that, that is the one that is there to stop you from climbing. So if something says, anything like, see, if business was easy or being successful was easy, everybody will be, right? Who are the people who are successful? The ones who can go beyond what somebody does. If you can, for taking a sports analogy, if you can run 10 rounds, that guy can maybe run slower than you, but he will run the 11th round also. So that is where, and he's not only beaten you, he has opened one more door in his mind that he thinks, yes, I can do anything I set my mind on. There's nothing I cannot do. Right? So she was reading my profile. So what is the difference between us and like special forces guys? We say, oh, they're heroes. What is it they do in the army? They take them, they put them in tough situation, they put them without anything, they put them without any comfort. 80% of the people quit. The 20% who don't quit only they take. It's not that they take it based on somebody's skill, whether that guy can do, he's an athletic guy. No, that is not the importance. Mental resilience to be that special person who's the 20% of the population. 80% of the population will do what others are doing. 20% of the population will do what they want to do. What is their purpose? What is their passion? Others are wasting time. He will study. Others are eating junk food. He'll eat good food. Right? If you're a professional athlete running for Olympics, how will you eat junk food? All your friends will be eating junk food. But this guy has the discipline not to do it. So I'm talking a little bit more on this because it is possible. There are youngsters, there are people I know. A lot of the CEOs, you will be surprised, are all good, very avid runners. Right? You see the old Twitter CEO, he used to wake up at 4 o'clock in the morning. Right? So he used to wake up at 4 o'clock, do whatever he needs to do. So many of the successful people actually, if they don't find time, they still wake up early. So I'm sure, I don't see anything as you, if you are passionate, you can do it. But your priority. So sometimes if you have exams, your priority should be studies. If you're playing a state cricket match, your priority should be state cricket match, not your, at that time you shouldn't be confusing yourself.
Sir, my name is Mohan Kumar. First year BCom Bank Management. The value of money is 30,000. In future, this will be 1 lakh. But now I 30,000, I can buy bicycle. But in future, I the same thing I will at 1 lakh. The long term investment is be loss, little loss. Investment, I prefer in short term.
இல்லை என்ன லாஜிக் நான் புரிஞ்சிட்டுமா? நீங்கள் 30,000 வாங்கி சைக்கிள் செலவு பண்ணிட்டீங்க, ஏன் செலவு பண்ணக்கூடாதுன்றீங்களா?
சார் அவன் சொல்கிறான் 30,000க்கு ஒரு சைக்கிள் இப்போ வந்து நம்ம பை பண்ணுறோம், அதுவே ஒரு 10 இயர்ஸ் கழிச்சு நம்ம ஒரு சைக்கிள் பை பண்ணுறப்ப அதே ப்ரைஸ் இருக்கும்னு அவன் சொல்கிறான் சார்.
கரெக்ட் இருக்கும். பட் அந்த ப்ரைஸ் இருக்கிறப்போ உங்ககிட்ட பைசா இருக்கா? உங்ககிட்ட நீ வந்து ஒரே பைசா தான் இருக்குன்னு வச்சுக்கோ. இப்போதைக்கு உங்ககிட்ட 30,000 இருக்கு, சரியா? அந்த 30,000 நீ கொடுத்து இன்னைக்கு சைக்கிள் வாங்குற, 10 வருஷம் கழிச்சு 1 lakhக்கு சைக்கிள் வாங்குற, கரெக்டா? அதனால உன்னோட வேல்யூ ஆஃப் மணி அதே தானே இருக்குன்னு கேட்குற, கரெக்டா? அதுக்காக தான் நீ இன்வெஸ்ட் பண்ணணும். நீ 30,000 rupees 30,000 வச்சிருந்தீங்கன்னா 1 lakh அது வந்து ஒரு illustration தான், சரியா? 1 lakh இல்லை, நீ இன்வெஸ்ட் பண்ணி காம்பவுண்ட் பண்ணி க்ரோ பண்ணியிருந்தா இட் மேபி 5 lakhs, கரெக்டா? நீ பாலிசி சி ஆர் கம்பேரிங் எஃப்டி பாலிசி ஆர் நாட் கால்ட் பாலிசி. எதுக்காக எடுக்கிறோன்ற அது கோர்ஸே எடுக்கலாம். பாலிசி எடுக்கிறது வந்து லைஃப் ப்ரொடெக்ட் பண்ணுறதுக்கு, பாலிசி எடுக்கிறது வந்து சில பேருக்கு வந்து பென்ஷன் டிரைவ் பண்ணுறதுக்கு. ஆனால் எல்லாம் இருக்கிற 100 ரூபாவும் பாலிசியில் போடக்கூடாது. நீ அதில் வந்து பாலிசியில் 10 ரூபா போட்டுட்டு 90 rupees நீ ஈக்விட்டிஸில் போட்டிருந்தீங்கன்னா ஈக்விட்டி உனக்கு 15%ல காம்பவுண்ட் ஆகுது இல்லையா? உனக்கு அந்த 10 yearsக்கு அப்புறம் அந்த 15% காம்பவுண்ட் ஆகிறது நெட் ரிட்டர்ன் நீ பார்க்கணும். வெறும் ஒரு பாலிசியும் இதுவும் நீ கம்பேர் பண்ணக்கூடாது. சைக்கிள் உனக்கு கிடைக்கும்னு வச்சுக்கோ, நடுவில் உனக்கு எதாவது ஆயிடுச்சுன்னா உன் ஃபேமிலிக்கு 10 lakhs கிடைக்கும், 10 crores கிடைக்கும். அது எப்படி பண்ண முடியும்? ஸோ தெர் இஸ் a completely different product.
Hi sir, I am Nitish Kumar from BCom Bank Management. My question is, what are the qualifications to become a wealth manager? How should I equip myself?
So like I told ma'am, do your MPhil, there are a lot of education sites. NSE-க்கு போங்க, you can do financial planning, you can do PM portfolio management services, you can do forex, you can do derivatives, you can do trading. Lot of courses are available. Basic வந்து MPhil பண்ணுங்க, CFP பண்ணுங்க.
I'm Jayashree from 3rd Bank Management. My question is, what challenges did you face in your career and how did you manage them?
Good question. Long story. So I actually had a lot of challenges because I came from an engineering background. And though I did my MBA, so I was, I had to, in those days there was no wealth management, anybody to even guide you, right? Because it was a new field. People didn't understand what mutual funds are. People will say, oh, adala pota panam poidum. People did not understand what is risk measurement, what is a risk appetite. So it took a lot of work to educate people, to even mentoring, nobody to mentor you. So I had to try to look at, let's say, websites, learn from abroad. So even if I want to read up about somebody who's done well in wealth management, it was not available. So I bought a book written by somebody from Merrill Lynch in America. So you have to do a lot of work on your own. So those are challenges you'll face, but today you have enough of support. You have enough people who are doing wealth management.
Sir, I am Pavitra from Bank Management. What is fire and how?
What is fire?
What is fire? And how can easily achieve it, sir?
Fire meaning internal.
Sir, financial independent retire yearly.
So yeah, financial independence, you have to save, you have to invest, you have to build your financial plan, as I mentioned, right? There is a whole process of financial planning. First you create a platform, it's like a pyramid. You have to first look at risk mitigation, look at what you're saving, what is the short-term cash flow, what is the medium-term cash flow, what you want to achieve by what age, do your goal planning, do your asset liability matching, look at what outstanding goals you may have in terms of cash flows. So it's a process. It's not something that you talk about in 1 second. But it is a process which is very simple. So if you want to retire early, start saving early, start getting into asset allocation, read up a little bit about financial planning, start making your investments, monitor it, review it. Don't blame somebody else. End of the day, it is your money. Ma'am, it's both an opportunity and a challenge, because if there is no ready answer to that, you just have to spend time on, getting your learning right. And secondly, I think it's a question of a lot of effort to educate people in that space. But the moment you do it and somebody is a client, they will not leave you, because you have captured their trust. And a lot of people have suffered, people who say, I'll do only deposits. During COVID, they had a tough time, especially aged people. They were just earning 4.5% taxable income, right? 4.5% taxed at 20, whatever the tax rate is. Net, they were hardly making any money. So we have to draw Excel sheets, show them what is the post-tax return, why it makes sense, what is the past data, what is the, like we were showing you, in this presentation, what is the opportunity in the market, what is the market cycle, why they should, and have them experience it step by step. It may not be that they, because it's hard earned money, they may not give it to you immediately. But we have to, but once you can gain their confidence and then do your reviews, go back to them and see that where the performance is, how to rebalance. I'm sure once they gain your confidence, they will be your clients for life.
Sir, one more question.
Yes.
Can you share few tips to the students at what age they can think about the wealth management or personal finance management, and how to fix the financial goal
Yeah.
and the amount, minimum amount? And there are in the social media they are suggesting so much of ratios.
Yeah. Yeah.
So what ratio is
Yeah.
suitable for which kind of goal?
Yeah. So simple
So
ratio is,
simple
yeah.
tips
Yeah.
which we all can
Yeah.
follow,
Yeah.
because after completing the degree they may get minimum of 20,000 salary. So with that thing, how they can develop their
Yeah.
finance?
Yeah. Good question. So see, the simple ratio that one can follow an asset allocation is the 100 or 110 minus age rule, right? So if your age is 20, then 100 minus 20 is 80. 80% goes in equity, 20% goes in debt. So that's a simple rule that one can follow. Usually gold and other asset class, we do not give more than 5% of allocation, especially to youngsters, because gold is not a, gold works well only in times of war and uncertainty, and it's not a consumable material, right? Except for jewelry, it's not an industrial material. Real estate assets should be maybe around 50% of your entire net worth, because real estate assets above 50% it becomes a problem because it's not liquid. So initially one can start looking at saving whatever corpus you may need for 6 months to a year, place it in some cash funds, place it in some deposits, um, place it even in bank, what you need on an immediate basis. Reason is, supposing you lose your job and you're working for whatever, there could be economic downturn. You should have at least 6 months to 1 year of your salary available as cash. It should not be locked into markets or somewhere, because you can use that for your, until you find the next job. So that is one more rule. Anything you require in the immediate short term, don't allocate to equity. Equity investments, try to allocate what you need where you can touch the capital after 3 years. So that if there is an interim market correction, you don't have a problem. So these are simpler rules, but you have to sit very carefully, because don't take it at whatever value I'm saying. So in debt also, you will look at, your short-term needs in cash funds, medium-term needs you will place it in, let's say short-term debt funds are there, medium-term funds are there, dynamic bond funds. So you will split it across depending on your needs. So all your allocation will be based on your age, your needs, your need for cash flow. So if your need for cash flow is not required for 5 years, then look at more of equity. But always have a buffer. And in terms of insurance, try to have a cover of at least 10 times your annual income, especially if you're a earning member of the family. Because if you're not there, then at least for 10 years, you should have that equivalent capital available for the family to recoup and come back to shape. So these are simple, broad guidelines we can offer. But as youngsters, don't speculate. Like my daughter was like, I want to do Bitcoin when Bitcoin was going. I said, you don't even know what Bitcoin is, right? So while it was a trend, everybody wants to put, no, my friend put money, he got money. My friend put money, he got money. I said, have you done homework? Do you understand what it is? So without understanding something, don't go do it because everybody is doing. There is a very high chance of you being stuck in it. And now a lot of people have got stuck in Bitcoin or a cryptocurrency where, there has been a huge correction in the markets. So don't speculate, don't do trading and betting. See, trading, even traders are not betting. Traders are everybody's got their own risk appetite in terms of what they're doing. They're trading, knowing the up and down of the market, and then they take a very clear call based on their need and liquidity and seeing the trend and seeing the lines and charts, which are indicating to them where it's heading. And they're trading also because maybe they need short-term income in this. But they're not doing it for the pleasure of doing some sort of horse betting. So don't do anything for the sake of speculation, because without understanding things, if you do, you can get inside, you will not know when to get out. So essentially follow a process. Oh, did I answer your question?
One final question.
Yes.
As the student has asked already, LIC insurance have the terms of 15 years, 16 years, 20 years, and more than that. And private insurance, that is the bank, private banks are offering the insurance policies which have very comparatively short period. That is, after 10 years, after 12 years, your money will be getting double. So, is it safe? Is it advisable?
So private insurers are as strong as LIC. Depends on the insurer. Every insurer has to maintain a certain corpus as a liquidity buffer with the regulator. So if anything goes wrong, even Anil Ambani's insurance company has paid money. So even though he has been bankrupt, so insurance is a very sacred thing for the government of India. So insurance, even private insurers are fairly safe. Go with well-known names. Uh, I think LIC and private insurers have similar plans. So you please ensure that whomever is showing you anything, first have where I have seen my business, we can't show any nonsense. But I have seen some private people, anything they can put in Excel sheet and paper, they will come and show. They'll say double, triple, it may or may not be true. So you should understand and ask them to give you official printed cash flow statement of projection. There it will clearly show, because IRDA permits you to show only between 4 to 8% as the return. So there are guaranteed products, there are non-guaranteed products, and so on and so forth. So do a little bit of homework and study. See what is your goal, because insurance, whatever you're doing, there is a goal. It should be, if you're doing only for risk mitigation, do a term plan. If you're doing for pension, go for a pension plan, because 60% of your corpus will be tax-free. Whereas if you do some other plan today with the new budget, it's taxable. So a little bit of study you do, based on your goals, you can come up with the right idea.
Sir, apologies for again and again deviating from the topic.
Yes.
Artificial intelligence is becoming a buzzword nowadays, right? If it's entering into everything. And what is your opinion about it on this wealth management or the banking sector as well, or whatever it is?
Ma'am, sorry, I don't know enough about AI. I'm sure a lot of people, almost nobody knows enough about AI unless they're. But see, it's too early to comment. While it needs to be regulated, that is what I'm hearing from a lot of senior people, a lot of people who are running companies, because it's got the ability to go out of control, because it can morph your voice, it can morph everything, and it can start creating. So it's very important to manage it. I'm sure if it's well managed, it will be a useful tool. But right now the question is how it's going to be regulated, how it's going to interact. If it's unregulated, it can be dangerous.
Thank you.
Replace. See, it can replace not only wealth manager, it can replace your role of your software guys, everybody, right? But the problem is, if it is unregulated, it can control you. So therefore, it's important to understand. I think it depends. It's going to be a question of the guy who created the AI himself advised the governments, please regulate me. So it's a question of people understanding and regulating, because
But
otherwise.
anyway, the instructions or anything to be given to AI is also to be from men or any human being, right, sir?
Can be, but it has the ability to learn and start predicting and moving forward, right?
But it will be in a very very one.
So exactly is the
It
reason.
cannot have use sense.
So I'll give you an example. Somebody was using some AI and it started telling that guy, divorce your wife. So it kept on telling him, divorce your wife. So I'm serious. So this guy was getting a little cranky and worried, and then he started trusting the AI. So the point is, it can start controlling how you see. It can give you. Today's world, what has happened with social media? We are so dependent on it, and we believe whatever media tells us is true. But then they say the whole elections in the US were manipulated, by the whole elections in Philippines were manipulated. So you don't know. See, because the media today, what you're reading on the internet is not verified facts. It can be what somebody's, by design, it's placed there. So it has to be regulated so that it doesn't go out of control. But I'm sure it's got a lot of benefits, but it's a question of ensuring that you have the right controls. So we'll wind up. Thank you. Good day.
Thank you, sir. Thank you for brainstorming speech. I'm confident the students are impressed in your presentation, sir. Yes, sir.
Some of them were not even asking questions.
The way to develop the best is in a person is by appreciation and encouragement. For the thank you note, I will call up Mr. Kritik Roshan from third year bank management.
It is my privilege to propose a vote of thanks and acknowledge the contribution of those who worked hard to make this seminar a great success. On behalf of Auchi College and the entire fraternity of the Institute, first of all, my sincere thanks to Almighty God for making today's event a grand success. By His blessings and grace, we are able to make the event what it was. On behalf of our department, I want to express my gratitude to our secretary, Mr. A.V.M.K. Shanmugam sir, who is the pillar of support and to all our endeavors. A special mention to our eminent principal madam, Dr. Booma, being a catalyst that inspired us to do our best and stand as a pillar of power. On behalf of our college, I give a really heartfelt vote of thanks to our chief guest, Mr. Vijay Nirmal Kumar, who spent his busiest time gracing the occasion. Today we had the Today we had the opportunity to hear your thoughts, and this is definitely encouraging us in our future events. Sincere thanks to the head of various departments and teachers who handled the event throughout. A wide round of applause and thanks to all the participants who made the event a memorable one. I also want to thank the Viscom department who worked behind the scene to execute this event, our technical arrangement team, the stage setting, and the housekeeping staff. Finally, I would like to thank all of you present here for making the time to be with us and today helping us to make this event a grand success. Thank you, one and all.